Ever bought something thinking you got a steal, only to realize, ouch, maybe not so much?
It happens all the time.
Yeah, and that's what this monetary illusion thing is all about, right? Like we get so focused on the price tag, we forget what our money can actually buy.
It really messes with our perception of value.
For sure. And, you sent us a ton of research on this, especially how it plays out with gold and Bitcoin.
Yeah, there are some fascinating parallels there.
Absolutely. And with the economy being as unpredictable as it is, figuring out smart investments is more important than ever, right?
Definitely.
So this deep dive, we're going deep into this monetary illusion.pdf you sent over.
I think your listeners are going to find it eye-opening. This illusion, it's more common than we realize.
Okay, so let's start with the basics. What is monetary illusion and how does it, trick us?
Well, it basically makes us focus on the face value of money instead of its actual purchasing power. Like, how much can you really buy with it?
Right, the number on the bill doesn't tell the whole story.
Yeah. Exactly. And there's this classic example with the Ferrari Testarossa. Between 1985 and 1988, the price in the UK barely moved. But in New York, the sticker price jumped 25%.
Whoa, that's a huge difference.
It is. And people assumed the car itself was suddenly worth more. But it was really the exchange rate between the pound and the dollar creating that illusion.
So the car didn't actually gain value, it just looked that way because the dollar was getting weaker.
You got it.
Interesting. But how does this apply to us today, in the real world?
Think about it like this. The FTSE might be hitting all-time highs in pounds, but that doesn't mean it's actually strong globally. If you measure it in US dollars or gold, the picture could be totally different.
So it's all relative. What seems like a gain in one currency might not be so impressive in another.
Right. Monetary illusion can distort our view of value, whether we're talking about a fancy car or a whole stock market.
Okay, so we can't just trust the numbers at face value. We got to look deeper, see the bigger economic picture. But then, what can we trust as a store of value? Everyone talks about gold, Bitcoin, but your research kind of throws a wrench in that, doesn't it?
Yeah, see, the idea that anything can hold its worth perfectly throughout history, it's a myth. Supply and demand are always changing, and that impacts everything, even gold.
So, even gold. But it's been like the safe haven for centuries.
It has, but even its purchasing power can shift over time. Take the average U.S. house price since 1963.
Okay.
Its value has been a total roller coaster, whether you measure it in gold, U.S. dollars, or even Dow Jones units.
Whoa, so even gold isn't immune to the ups and downs. That's kind of unsettling.
It's about understanding that nothing is completely stable. Gold still has great characteristics. It's scarce, it lasts, it's accepted everywhere.
That's reassuring, at least.
But we've got to be realistic. No asset is perfect.
All right, fair enough. So gold isn't a foolproof solution. What about Bitcoin, then? It's been all over the news with those crazy price surges, but your research seemed, well, skeptical.
I am. Bitcoin is fascinating, don't get me wrong.
Oh, for sure. It's definitely intriguing.
But let's be real, it's more of a speculative thing than a stable currency or a truly reliable store of value. Remember that mutual fund bubble back in '66?
Big gains, then a huge crash.
Exactly. And Bitcoin's volatility can be 10 times higher than the US dollar. It's risky, to say the least.
That's a pretty stark comparison.
And
What about that mysterious Bitcoin wallet, the one holding 1 million Bitcoin untouched since, 2009?
yeah, that one. Fuels all sorts of conspiracy theories. Who owns it? What are they waiting for? It's a great mystery.
Right.
But even that doesn't change the fact that Bitcoin's price is all over the place. More of a gamble than a safe haven.
Okay, so if gold's not perfect and Bitcoin's a roller coaster, how do we navigate this world where prices are constantly changing? You mentioned this term inflationary bust. What exactly is that?
That's the key question, right? It's basically when you have economic stagnation, but prices are still going up. It's a nasty combo.
So even if the market looks good on paper, it doesn't mean the economy's actually healthy. We could be heading for this bust without realizing it.
Exactly. And there are signs, Your research highlights the dangers of tariffs, for example.
It seemed like a good idea at first, protecting our industries, but
But history shows they can backfire big time. Think back to Woodrow Wilson's tariffs in 1913. The goal was to protect American industries, but it actually hurt the U.S. economy in the long run.
so we might be repeating history, even though things seem okay now.
It's a worry, for sure. Higher tariffs can make recessions worse in other countries, and that could come back to bite the U.S. too, domino effect.
Okay, so this inflationary bust is a real threat, even with the U.S. boom. So how do we invest then? The classic advice of stocks, bonds, real estate, does that even work anymore?
It needs an update for sure. The permanent brown portfolio, the one that allocates 25% to each asset.
Yeah, I've heard of that.
You might want to underweight contracts, that's cash and bonds, especially long-dated U.S. Treasuries, and overweight properties like stocks and physical gold.
Hold on, why reduce bonds? Aren't those supposed to be safe?
Well, safe is relative. Don't forget, everything fluctuates. Even government bonds can lose value, especially compared to something like gold.
Right, right.
And in an inflationary bust, the fixed returns from bonds get eaten away by those rising prices. But stocks and gold, they have the potential to grow faster than inflation.
So it's about shifting away from things that seem safe but might be losing value in real terms and focusing on things that can actually grow, even when things are bumpy.
You got it.
This is where it gets interesting.
Definitely. Recognizing the limits of the old ways and adapting.
Right, because in this kind of environment, it's not just about making money, it's about keeping it.
Huh.
And that's where dividends come in, right?
Absolutely. Your research really emphasizes companies with a strong track record of dividend growth.
Because it's a return of capital, not just a return on it.
Exactly. In uncertain times, protecting what you have is paramount. Dividends, they give you income without eating into your principal.
Like a buffer against inflation.
Exactly. Steady cash flow to help you maintain your purchasing power.
Makes sense. But which stocks are we talking about specifically? What makes a company thrive during an inflationary bust?
It's about building what you call a smart defense portfolio. Focus on sectors that are essential, that hold up well when times are tough, like IT, energy, aerospace defense.
Okay, IT and energy, those make sense. People always need tech and power no matter what. But why aerospace defense?
Well, sadly, when things are uncertain economically, geopolitical tensions often rise. That means governments spend more on defense.
Ah, so companies in that sector benefit. Makes sense, even if it's a bit grim.
It is. But within those sectors, we need to zoom in on individual companies and their financials. First, the track record. Strong, consistent growth in their earnings per share, sales, and dividends.
So they're not just surviving, they're thriving and have the numbers to show it.
Right, and robust free cash flow is key. They're making more cash than they need to run the business and invest. That gives them flexibility, to handle downturns, pay dividends, or buy back shares.
Got it. Low debt too, right?
Absolutely. A low net debt-to-equity ratio, ideally under 50%, means they're not drowning in debt and can handle their obligations even if things get rough.
Okay. Low debt, strong cash flow, consistent growth, and we want to see those solid dividends too. You mentioned aiming for a yield of 3% or higher.
At least. But with all these filters, you might be surprised how few companies actually make the cut.
How few we're talking?
Well, when we applied all these criteria to the S&P 500, only 6 companies fit the bill.
Wow, only 6 out of 500. This smart defense portfolio really narrows things down.
It's all about finding those hidden gems the companies built to withstand the storms and deliver consistent returns.
So not just surviving, but thriving, even with inflation.
Sure.
This is really interesting. Before we dive into the specifics of these companies and how to build this portfolio, I want to go back to something you mentioned earlier, this S&P 500 to gold ratio.
Right.
You said it's super important for understanding market sentiment and the economy's health.
It is, and it ties directly into everything we've been talking about.
Okay, so explain it to me like I'm 5. Why is this ratio such a big deal? Especially with this whole inflationary bust thing looming.
Think of it like a thermometer for the market's mood.
Okay, a thermometer, I like that. So when the ratio is going up, that means...
Investors are feeling good, they're bullish, pouring money into stocks, so the S&P 500 goes up.
Makes sense. Stocks are hot, gold's not so much. But what happens when the ratio drops?
That's when you got to pay attention. Means gold's doing better than stocks, and that often signals that investors are getting a little spooked, looking for safety.
Moving away from the paper assets, back to something tangible, something with real history?
Exactly. It's like they're losing faith in those paper promises and turning to something they can hold in their hand.
Right, back to basics. So historically, when this ratio dips below its 7-year moving average, that's a bad sign.
It can be. It often suggests that an inflationary bust might be brewing.
Okay, so that's the red flag. The ratio tanks, alarm bells go off. But what do? Panic, sell all our stocks, buy a ton of gold, and hide in a bunker.
Whoa, hold on there. No need to panic. If your portfolio's set up right, with a good balance of gold and those smart defense stocks, you should be in decent shape.
So it's not about trying to time the market perfectly. It's about having a plan that can roll with the punches.
Exactly. Stay informed, stay calm, stick to the plan. Don't let fear make your decisions for you.
Solid advice. This has been eye-opening, seriously. We busted the myth of perfect stores of value, explored how money's actually created these days, and even found an investment strategy that could actually work in this crazy economy.
It's all about adapting to the times.
For sure. Anything else you want to leave our listeners with before we wrap up and dig into building this smart defense portfolio?
We've talked a lot about how monetary illusion can mess with our heads, especially when it comes to money and markets.
Right.
But this illusion, it can show up in all parts of our lives, not just finance.
Really? Like how?
Think about it. How do we value our time, our relationships, even our own self-worth?
Ooh, that's deep.
Are those valuations based on something real, something solid, or are we letting outside stuff, societal pressures, even our own biases cloud our judgment?
Whoa.
Are we chasing things that actually matter, or are we stuck in some kind of life illusion?
That's a big question. It's like taking this whole monetary illusion thing and applying it to our whole lives makes you really stop and think about what's truly valuable.
Recognizing those illusions in money and in life, that's what gives us the power to make choices that truly align with our values, with what we really want.
That's a great message. Be aware of the illusions, stay grounded in reality, and choose what matters. Awesome stuff. Thanks for joining us for this deep dive. It's been a blast.
Thanks for having me. It's been fun.
Oh.
It really highlights how we can use this information, This S&P 500 gold ratio, it's like a gauge of how the market's feeling.
Okay, a gauge.
Yeah, when it's going up, it means investors are confident, they're putting their money into stocks. That pushes the S&P 500 higher.
So, rising ratio, good times. But when it starts to fall,
that's when we got to pay attention. It means gold is outperforming stocks, which often means investors are getting nervous, They're looking for safer bets.
shifting away from those paper assets, going back to something real, something that's held its value over time.
Exactly. It's almost like they're losing faith in those promises on paper and turning to something tangible, something they can actually hold.
Going back to basics. So, historically, when this ratio drops below its 7-year moving average, that's not a good sign.
Not usually. It often suggests that an inflationary bust might be on the way.
Okay, so that's the red flag. Ratio plummets, alarm bells start ringing. What should we do? Sell all our stocks? Buy a mountain of gold? Hide in a bunker?
Whoa, hold your horses. No need to panic. If you've structured your portfolio well, with a good balance of gold and those smart defense stocks we talked about, you're probably in pretty good shape.
So it's more about being prepared than about trying to time the market perfectly, right?
Exactly. Stay informed, stay calm, and stick to the plan. Don't let your emotions take over and make decisions based on fear.
Some really solid advice there. Honestly, this whole conversation has been a real eye-opener. I mean, we debunked this myth about perfect stores of value, learned how money is actually created these days, and even found an investment strategy that could actually work in this crazy economy. It's pretty amazing.
It's all about adapting, right?
Absolutely. Any final thoughts you'd like to leave our listeners with before we wrap things up?
Well, we've spent a lot of time talking about how monetary illusion can distort our perception, especially when it comes to money and markets. But this illusion, it can show up in other areas of our lives too, not just finance.
Oh, really? Like how?
Think about how we value our time, our relationships, even our own self-worth.
That's interesting.
Are we basing those valuations on solid principles, or are we letting external factors, societal pressures, or even our own biases cloud our judgment? Are we truly chasing what matters, or are we caught in a life illusion?
Wow, that's a powerful question. It's like taking this whole monetary illusion concept and applying it to our entire lives. It really makes you stop and think about what truly holds value, doesn't it?
Exactly. And becoming aware of these illusions, both in finance and in life, that's what empowers us to make more conscious choices, choices that align with what we truly value and what we want to achieve.
That's a great message to end on. Be aware of the illusions, stay grounded, and make choices that truly matter.
This has been an incredible deep dive. Thanks so much for joining us. It's been my pleasure. Thanks for having me.